Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Wednesday. Got the debate today. I don't know what, if we got too much else to move markets. It was pretty, I didn't see any major news in the overnight. We do have services PMIs today, though. Hold on, did I not get the audio set up correctly here? No, I did. It went off twice. That's weird. Well, anyways, let's come over to the charts and kind of see where we're at. It kind of does look like the treasuries here moved quite a bit. So a little bit of a push higher here again. That reversal yesterday was quite something else, but it kind of like reverted. Now today we're higher. By the way, what is the Japanese yen at? Oh, look at that. They were able to get it away from 145 again. Very interesting. Here's the S&P 500, kind of still struggling. Yesterday was a little bit of a doozy for them. Well, I mean, nothing like too damaging, but they look like they're struggling a little bit. Here's oil on the downturn this morning. Gold and silver, well, silver recovering quite nicely here. And copper doing okay too. So the metals complex looking pretty okay on trend still. Bitcoin seeing some volatility overnight and a little bit of a buy, but it's just like a little one. Here's the dollar getting stronger again. Now that's interesting with the equities are down, dollar up. I guess that one makes sense, but the treasury is also up. Okay, so we got a little bit of an interesting macro environment here this morning. Come back over here. And again, well, we just got Canadian retail sales like 2 minutes ago, right? But we also have S&P PMIs. Now remember, the S&P PMIs are kind of like old data. They don't matter as much, but the market has been paying a lot of attention to PMIs, so you're still going to see the market move quite a bit on those. You also get new home sales. There is a 20-year bond auction today, so that is definitely worth keeping an eye on. So I think that the picture is very, very different from yesterday, right? Yes, yesterday it was the rates keep pushing a little bit higher, and it looks like there's some pressure. They want to try and move again. And that was like the main story. Today, they have pulled back enough that I think we're kind of safe from that for now. I would really take a monster move, probably some sort of market moving news for us to get down to like the lows, right? So I don't kind of see that same kind of like, speculative flow looking to push it today. So, but we do have a bond auction. So that's like a completely different kind of market, right? So we need to be looking out for icebergs and some opportunities for small little trades. I'm just kind of looking around, seeing what kind of interesting things we got going on. I guess one thing that is interesting, story on Zero Hedge that I read this morning. The title is U.S. jobs are about to be revised lower by 650,000. So there's this guy that has a pretty good case for why we're going to see some more lower revisions. And their take was basically that once you take all of the revisions into account, that the interest rate increases have been affecting jobs. And so their take is that this will actually move up expectations that the Federal Reserve will reduce rates sooner. So it's almost the exact opposite of the narrative that I think we've been hearing earlier in the week, earlier in the month, which is that like there's a risk of further rate increases because the economy is not really responding. Now that and then when they take the revisions into effect, they're basically like, oh, actually the economy is responding. It's just that it's being hidden from us by data manipulation. That's what they're saying. So that's their theory. But it is a very curious shift, and I can kind of see this shift all over the place. Okay, so here's something I see that I also missed. Yields tumble after European PMIs signal stagflation acceleration. The contraction of private sector activity in the euro area intensified in August as the composite flash PMI decreased by 1.6 to 47, below consensus expectations of 48.5 on the back of a further meaningful decline in services activity, offset partially by an improvement in the manufacturing output index. The service sector of the Eurozone is unfortunately showing signs of turning down to match the poor performance of manufacturing, Cyrus de la Rubia, chief economist at Hamburg Commercial Bank, said in a statement. Service companies reported shrinking activity for the first time since the end of last year, while output in manufacturing dropped again. The composition of August report showed continued declines in the new orders employment and backlogs indices, but a small improvement in new export orders, although these remain in contractionary territory. Worse still, firms' future output expectations edged down further, reflecting a more pessimistic outlook in the services sector, and even more problematic for central banks' price pressures. Both input and output price components ticked up for the first time since January. The PMIs were very weak and highlighted the dire outlook for Europe's largest economy and the risks ahead of the September ECB policy meeting, said Valentin Marinov, head of G10 FX strategy at Credit Agricole. Across Euro area regions, France, the French composite flash PMI remained unchanged at 46.6, below consensus expectations. Across sectors, a decline in the services index was offset by an improvement in manufacturing output, although both remain in contractionary territory. Germany, the German composite flash PMI decreased by 3.8% to 44.7, well below consensus expectations. The decline in the composite index was broad-based across sectors, but skewed largely towards services, where the index fell sharply. The periphery composite PMI declined by 0.6 to 49.5, driven by a meaningful decline in services, which is now only slightly above 50. That was offset partially by an improvement in manufacturing output, which remains in contractionary territory. Separate data for the UK showed private sector firms suffered their first contraction in 7 months. UK composite flash PMI decreased by 2.9 to 47.9, also below consensus expectations. The decline in the composite index was broad-based across sectors as services index fell into contractionary territory for the first time since January. While manufacturing output declined further to 43.3, the press release attributed this weakness to a reluctance to spend among clients in the wake of higher interest rates and stretched disposable household incomes. The composition of the August report showed broad-based declines across new orders, employment backlogs, and new export orders indices. The reaction was swift, with bond yields tumbling and stocks too. Finally, we see Goldman sees 3 main takeaways from today's data. First, euro area growth momentum appears to be weakening by more than anticipated. Due to a sharper deterioration in services activity, country press releases attributed today's weak print to a range of factors, including inventory destocking, weak poor in demand, and a squeeze on both household and corporate budgets. Second, despite the weakening in activity, underlying price pressures are turning out to be more persistent. This is particularly true in Germany, where the services price components ticked up for the second consecutive month. Third, growth momentum in the UK appears to be slowing on the back of weakening in demand, which is being accompanied by a moderation in inflationary pressures. Rate hike expectations slipped after the prince. It strengthens the hand of those who are arguing for a pause in September, said Dirk Schumacher, an economist at Natixis SA. I've never heard of him. The economy is clearly not doing well, given these figures. So this is very interesting. So if we come back over here and we look at the market and kind of try and take this into account now, when we saw the S&P, started dipping at around 230, and the bonds had already risen up into that, although they are retracing a significant portion of that. And we see oil down and gold and silver kind of rising. So I do think that what we're seeing is kind of consistent with a stagflationary environment. A stagflationary environment where we're really seeing the economy weaken. And so it's like, well, you're going to have to put economic stimulus into the economy at some point, but you're still going to have like those price pressures, so they might not be able to lower rates as much, or it might be difficult, and thus you have gold and silver rally on that. Because when I look at gold and silver compared to the bonds, like silver in particular is just like gangbusters up there, and so is gold, whereas the treasuries came back a good clip, right? So I think that might help explain why we're seeing some of the activities that we are. So that there appears to be some positioning overnight for more stagflationary environment and economic weakness. Okay, good morning, Walter. Good morning, Mission. India just deployed a thing on the moon successfully. I saw live. Oh, really? Well, that's really, the most curious thing about that is that India's launch was successful and China's was not. Very interesting, yeah. Foot Locker crashes on chilling echoes of consumer softness. Now I'm seeing it. So, like, last week, so I bought a couch. Okay, I got a new couch. Because we wanted something that separated the rooms and was like a sectional, had more seating, and would keep the little ones kind of over there more. Which, by the way, has been working out perfectly. I think that I would like to get something that like truly like cuts them off so that they have to stay over there. But I digress. Maybe that's not necessary because we've also been cleaning out the downstairs so that they play down there. So when I need to get them away from mom because she's making dinner or whatever, I can just throw them down there. But so my old couch is in my garage. My old couch and a recliner. Which, by the way, that recliner, I got the recliner for $50. I really liked that thing. In fact, I think that I maybe prefer sitting in that than in my new couch. Despite the very, very nice leather on the new couch. So, like, I'm trying to sell it. I gotta get rid. It's in my garage. I'm trying to get rid of it. And it used to be that if I put something up on the local classifieds, that it would be almost gone within a day. Like most of the things that I've sold in the past, they go right away. Now, and I understand there's a lot of couches out there. There's a lot of couches out there, but I put a pretty good price on them, and like I really expected people to come get them already, and I've gotten a few inquiries, but they're still there. And I feel, and not only that, but, I go out there every day and look at the classifieds and look at what people are putting out there. And I'm seeing a lot of things where it's like, I normally I would have been concerned about, I need to go and get that today. If I want that, I would have to go and contact them now. It's not happening. The items remain up there for weeks and weeks and weeks, and they have to repost them. So it was just like all of the sudden, in the past month or so, I've just seen like this pullback in consumer activity. And there, we also saw it in credit card activity too, by the way, right? But then we got all of the PMIs and the retail sales and all of this other information, and it said, nah, that's not happening. Like retail sales has been way better than expected, right? So I kind of gave up on that thought. But now, with these new PMIs, it's coming back. It's coming back. This sudden weakness in consumer activity that like people have exhausted their savings or whatever the deal is, and they are now holding back on spending activity. So short everything? Well, it's not so bad that I'm sitting here like, oh, there's going to be a recession, fire sell, everything. No, I don't think it's quite that, right? It's like, well, there's a little bit of weakness in the economy. That doesn't mean that we're about to have a hard landing. But I think that it does change the interest rate trajectory quite a bit. So if we were going to go all in speculating off of this particular information in the treasuries, then the call is totally to go long treasuries, right? Like we're seeing a tactical location. And I tell you what, when you come back and look at the chart, is this a good place to go long? I mean, if that economic data wins out, then this is an awesome place to go long the treasuries, isn't it? So that's kind of what I'm seeing. Equities, I would think would probably sell off, but the damage there might be limited. And on a short-term basis, I don't think that this is going to be what drives the flows. And that's kind of the bigger thing, is that in the treasuries, you might be able to go long because it's in such a good spot. But like, do I go short the equities? I'm not sure. Things could, there could be more long flows in equities before that kind of comes through. And it might take a month or two for the rest of the market to kind of realize this is happening and that become the dominant narrative that drives people's decisions. So I don't think you could just go short everything. But it is kind of a big shift, I think, that we can really try and game with the flows, right? But like here, the treasury's selling at the moment. I don't think I'm in any rush to try and get in front of that. What's this? Oh, okay, I misunderstood what this guy was saying. Somebody was just pointing out that a lot of people are crossing the border. Yes, there are. Cat turd, Twitter is trying to force everyone into the center, and if you don't comply, I'm not sure that that's true, cat turd. So what evidence would you have for that? I suspect that it's more that there are a lot of people. You know what? Can I rant political here? I know it's early. But it's bothering me, and I want to rant political. I'm not as interested on this downside. So as it's going on the downside, I think I can kind of like sit back here a little bit. Let's see, because who knows? They might make it back to 4.3 again today. I think that the far right has lost the plot in the past like 2 years, right? Like they have a lot of stuff to be angry about for sure. Like when you look at issues and things that are going on, like the corruption of the Biden Department of Justice is just unreal, in my opinion. Okay. Now, the far right is like super pissed because Republicans aren't doing anything about it. But I think the thing that's not being said there is like, there's not really a whole lot that they can do. Okay. This is not necessarily the time for like action. And this is really more the action time for like bide your time. You know what I'm saying? Well, anyways, we came into this like there was a primary season, okay? And we knew that it was going to be Ron DeSantis and Donald Trump were going to be the top two contenders. And we've known this since the beginning of the year. And Ron DeSantis got to the position of prominence that he has largely because he was had policy that was very anti-woke and frankly was very conservative and was extremely effective in Florida and in fact moved the electorate in Florida and made Florida a much more of a swings Republican than a complete toss-up state like it had been for so long. And a lot of that was attributed to Ron DeSantis. Okay, so that's why Ron DeSantis became in my opinion, why he became the primary challenger to Donald Trump. And so what happened? Well, Donald Trump went after him. This is the biggest contender. Donald Trump's going to attack him. And he kind of attacked him from the left, which I thought was kind of curious. But it seems like the broader public didn't pick up on that. The broader public didn't pick up on that Ron DeSantis is actually running a more conservative campaign than Donald Trump. And when you hear the criticism online, they treat Ron DeSantis, they're trying to treat him the same way that they treated Jeb Bush by saying that he's an establishment stooge and all of these sorts of things, right? So what I'm getting at here is that it feels to me like MAGA has really, I mean, it was always like a cult of personality to some extent, but now I'm very much seeing people abandon principles and positions and so forth that they had held in the past, all for Donald Trump's sake. And meanwhile, I'm seeing, you know, a further push on that side of the aisle into conspiracy theory nonsense. So, for instance, I'm very bothered by a lot of the things I'm hearing people say about the, how do you say it, Lainaka fires, right? They're all saying that the fires were on purpose, that this was all so that they could take the homes and buy the land out from underneath of them, and all of these other crazy sorts of things, which I think is just absolutely ridiculous and frankly a little bit offensive of a thing to be kind of like pushing politically after a disaster. You know, that's kind of as bad as when so why do I keep having a hard time remembering his name? Is it because he's been canceled and they're trying to erase it from the mind and I've been brainwashed? Alex Jones. It's as bad as when Alex Jones was alleging the conspiracy theories after the Sandy Hook shooting. I think that's kind of a similar sort of a take. Not that there wasn't like crazy bad things that happened over it. Actually, so I was reading yesterday. Slight little segue here. We'll come back to what I was talking about. One of the big things that you hear about the conspiracy theory guys is that like the water was turned off. Okay, that's not exactly accurate. Apparently, there has been a bit of a dispute over water on Maui for some time now. And the infrastructure for water in that particular area of the island, on the western side of the island, was not very good. So what happened was, when you started having the fires, it burns the house, and like the system loses water pressure because, you know, the piping and everything gets disconnected from it. And that happens in you know, you're having fires in multiple places. Like the system loses water pressure, essentially. Okay. So as the firefighters are trying to fight it, you know, their water is drying up. It's not coming out because of the system lost water pressure. Right. And then on top of that, well, there is connections to other parts of the island, but the other part of the island did not open the gates. I don't know if that would have made a difference, but they were slow or whatever the deal was, and they didn't open the gate. Right. So like to say that that was a conspiracy and like they intentionally burned that community down, I think is ridiculous. There's real reasons, logical reasons why it played out the way that it did, and like I said, it's kind of one of those fat-tailed events where the disaster that happened just perfectly targeted your weaknesses, and so the result is that you get a really bad disaster. I think this is a really important thing to learn about the world. Okay, this is the nature of the world. Or I want to say the nature of nature, but it's the nature of the beast, right? Is that we're going to build up systems, and those systems are going to have flaws. They're just always going to be there, and we often don't realize that those weaknesses are there. And eventually, you will have an event that causes problems related to those weaknesses. That basically an event that you are perfectly weak to. And so you end up with a big disaster. And that's the way that it happens in the markets, is everybody has these strategies, and hedge funds create these strategies and so forth, right? And then, they're all doing the same thing. And then an economic crisis or move or whatever the deal is happens that just perfectly targets the way in which everybody is weak, and then they all lose everything. That's the way that things tend to go. And so you have to be cognizant of where those weaknesses are and be ready for that event, because it seems unlikely, but it always happens. So, you're right. I feel like they're going like further and further into conspiracy theory sorts of stuff. And what I'm seeing happen is everybody else is disconnecting. Like, it used to be that when Cat Turd would tweet something, I was always funny and I was interested in hearing what it was, because it was like relevant and insightful and everything. And now I feel like it's either, if he's saying something insightful, it's about the Donald Trump indictments, which I'm not that interested in, because I know that it's all just nonsense anyways, right? Or they're going like way off the deep end. And so I myself am not as interested in these people, and I can see that they don't get the engagement that they did. I don't think it's the algorithm. I think it's the public telling you that you're drifting away from them. So we'll see. The debate tonight is going to be interesting if we see that sort of a thing, because Donald Trump's not there, so you would think, oh, it's not going to be like that. It's all going to be establishment stuff. But no, not quite, because Ramaswamy is going to play the far right conspiracy theorist guy. Did you? Oh man, I almost forgot about this. Like, when I read this story before I went to sleep, and it was like all I could think about when I was going to sleep, and then I had completely forgotten about it until just now. But so Ramaswamy had an interview with, I think it was the New York Post. Actually, I should come back and check. Who was it with? Wasn't that? I think it was Salon. Oh, okay. So it was at the Lincoln. It was at a Lincoln dinner. And it was published by The Atlantic. So he's going on a rant about, conspiracies surrounding January 6th. Basically that, January 6th was partly pushed by federal agents who wanted there to be some sort of a thing so that they could make political hay about it. And then all of a sudden he was going on about 9/11. And he was saying that government agents were involved in 9/11. No, not even kidding. I'm not even kidding. I think it is legitimate to say how many police, how many federal agents were on the planes that hit the Twin Towers. Maybe the answer is 0. It probably is 0 for all I know. I have no reason to think it was anything other than 0, but if we're doing a comprehensive assessment of what happened on 9/11, we have a 9/11 commission. Absolutely, that should be an answer the public knows the answer to. The heck are you talking about that crap for? Right? So then he's on CNN and they ask him about it. He says, "Oh no, I didn't say that. The quote is wrong. The quote is wrong, actually." And so then the Atlantic turned around and said, "Well, here's the quote," and gave the whole audio of the thing. So like he denied it. I don't. So let me read you specifically what he said. But your quote here, you're telling me the quote was wrong here? 20 years later, yes, but are you telling me that your quote is wrong here? I'm telling you the quote is wrong, actually. So I understand that it's a comparative analysis because I just read it to you, right? He's saying, okay, he's talking about January 6th, so we should know the truth of what happened on January 6th. Now he's comparing it to 9/11. We should know the truth about what's happening on 9/11. Okay, but I think we do know the truth of what was happening on 9/11, right? Like, why would he bring that up at all? Why would he bring that up at all? It is such a, like, even I couldn't make that leap, okay? Like, ADHD Seth, totally prone to jump from one topic to the other and go off on something that's not maybe relevant, or say something that the audience doesn't want to hear and loses himself viewers, or what. Even I couldn't make that jump. Come on, man. And I'm just telling you, what you watch on the debate tonight, I bet you he's gonna stick his foot in his mouth. Because I really don't think that this guy is serious. I think that he's another one of those, you know, I've had success from in tech. I've Silicon Valley. He's had success in Silicon Valley, and so now he thinks he can turn around and turn it into success in politics. And he takes a cynical approach to it. That's like, well, you know, sometimes you have to lie, sometimes you have to say that, you know, play to the audience, etc. And so he thinks that he can play to the far right and play on, you know, their vulnerabilities and so forth to propel himself to success. That's what I think he's doing. And you can definitely see it as he will like kind of play to the conspiracy theory crowd. But in the end, I think he's a dilettante. Like, he's not actually serious. He doesn't actually understand the world that he's approaching here. And I think that it's going to result in a blow up in the debates. He's going to say something, or he's going to hint at something. Well, Uzi agrees with me on that one. Cool. We agree on something for the first time in 3 days. No, it hasn't been that bad, but I think he's going to say something, and one of the other candidates is going to come up and be like, "No, that's sorry, but I'm not okay with you saying that," and push back. And then there will be like this back and forth with it. I think that that's something highly likely to happen tonight. But maybe it doesn't happen. Maybe he doesn't get that much airtime. You know, it could be like with Andrew Yang. You remember with Andrew Yang, it was like they didn't really give him a whole lot of opportunities to speak. I mean, he had like, I remember that one debate, there was like 7 or 8 times where he spoke, but he wasn't really able to get any kind of a moment that really resonated with people. And when you looked at his answers and the way that he approached it, it was kind of like a naive high schooler's approach to a debate. You know, it was somebody that didn't really have the debate. So I think another person that, well, I remember talking about this at the time, but a Huntsman, when Huntsman was in the Republican debates, you know, every time that he would have his answer, he would always start out with like this introducing statement, and he would waste all of this time. It's like the first thing, words that come out of your mouth, they need to resonate with people. That's how you get those moments is is you say the thing and everybody goes, oh yeah, I do, you know, even if it's not true, if it like resonates with people's emotions, that's how you get those moments. And he would always waste that opportunity on some sort of essay introduction sort of thing, right? And Andrew Yang kind of did the same thing and then was like, well, why am I not getting any traction? It's because you suck at it. I don't think I would necessarily be good at debates either, by the way. You know, you remember, before 2008, my biggest interest was politics. I was obsessed with politics. I spent all of my time thinking about politics. I mean, I always thought that I was going to make video games and do politics. I mean, my hobby was going to be politics. And then 2008 happened and I completely shifted everything over to finance. Right? But I never gave up politics stuff. I involved in a lot of campaigns. I've kind of lived that my whole life. And I know enough to know where I am like completely out of my depth, you know? Like there's just so much that goes on strategy wise in a campaign that you know, we on a day-to-day basis can't even fathom, you know? And I constantly seeing these rich guys coming in thinking that they can just wing it. It doesn't work like that. I won't be watching the debates because I don't have cable. Hey, Uzi, good thing for you. They are going to be streaming it on Rumble. So normally I would live stream this, right? Normally I would live stream this, but I'm thinking, unless somebody has a really good reason they can convince me otherwise, I'm thinking that I probably shouldn't. So Fox is going to be putting it on Fox and Fox Business, of course, right? Well, I heard Fox was going to be terror drones about taking down streams. Could be, but they are going to have a stream on Rumble, is my understanding. Here, let me pull up where I got that from. Okay. PBS.org, how to watch the first GOP debate. It is almost time for the debate among the Republicans. There's all the information to watch. The 2-hour debate will start at 9 p.m. Eastern Time on Wednesday. It is being moderated by Fox News Channel hosts Brett Baer and Martha McCallum. Unlike previous presidential debates, which have been simulcast across a number of major networks and cable channels, the first forum is airing exclusively on Fox News and the Fox Business Network, as well as on Fox's website and other streaming and digital platforms. In lieu of the network's YouTube channel, the Republican National Committee has partnered with Rumble, a video sharing platform popular with some conservatives, to live stream the debates. So that's why I think that because they are specifically trying to highlight Rumble as the streaming platform for this, I don't think that they would appreciate me live streaming and commenting on it on YouTube. And so I will just avoid that. When we get into debates that are like more shared and like it's on all of the networks and stuff like that, then I will do like the simulcast sort of a thing. But for tonight, you're on your own. We'll be watching it. I don't know if I'm going to watch it on Rumble or if I'll go over to my parents' house. I think I might go over to my parents' house. I think that they still have cable, right? Now, as I've been yapping here, the treasuries have turned into a pretty big long. Now, I guess I could have made 1 or 2 basis points on a trade from that. I don't think that I would have had the guts to have gone for the reversal. So we're already a little late. I'm also a little bit concerned about, is it actually going to like continue up? Well, when I see it in the 5-year, it really looks like the yes. Although I don't know if you're getting a good price right here. So let's kind of try and relax on it. I think I should also be careful because I don't think that we're in so much of a trendy day. And I have been struggling still. So we were talking about yesterday, because one of the things you said, Uzi, is like, how can that still make you nervous? Well, I think that for one thing, that I am more prone to people from, like, you get trading PTSD. and your medulla or whatever it's called down at the bottom of your brain like memorizes all those things and will push the emotion to you. And I'm very prone to that. So part of it is just that there's like that emotional memory in there from me having so many struggles in the past. And then on top of that, I've been in a drawdown. So like the thing that's going through my head is, well, the last thing that I want to have happen is be you know, 2 contracts along the wrong way and lose $50. Right. So I think that's why it was making me so nervous. What debate are you talking about? There is a Republican debate tonight. So the Republican presidential debate tonight, 9 o'clock Eastern time on Fox Networks and Fox's Rumble channel. Donald Trump will not be attending the debates. Donald Trump has chosen to skip the debate. Oh, it's so interesting. Yes, that is to choose the party's nominee for president. You know, basically the thing that Trump is running for again. And just to recap what's going on with Donald Trump will not be attending the debate. He has already recorded an interview with Tucker Carlson that will go live on Twitter at the same time, which I don't know if that's actually, well, I thought at first that it was like, oh, he's going to like totally distract everybody from the debate. But because it's pre-recorded, I don't think it's going to be like that, because you'll be able to watch his interview after the debate if you want, right? Do the debate and then watch Donald Trump afterwards. That's what I'm going to do. But then on Thursday, apparently he's supposed to turn himself in for, you know, like to be held in prison in Fulton County, Georgia or whatever. Because all of these leftists have been talking about how poor the conditions are in the jail, and he'll have to be in there for a night or whatever the deal is for his arraignment. So I'm definitely seeing a little bit of moderation in this spot. There was also some interesting behavior around 13.5. So I'm watching to see if they get sucked back into that. So far, it's looking like they're not. Zelensky says Crimea will be deoccupied, as well as all other parts of Ukraine. Saying Donald Trump is going to turn himself into a pickle. Oh, man. I got to admit, like, I went and I watched Rick and Morty to see what all of the noise was about, with a total cynical attitude about it because of how like hated the fans of that show are and everything. But I did enjoy most of it. There were some episodes I'm like, screw this. But there's some episodes that are really good. And the pickle episode is one of them. So just noting that Bitcoin is kind of turning down now. Oil is also to the downside. The Japanese yen appears to be heavily correlated with the treasuries as well, and the dollar. So the dollar lost quite a bit and the treasuries came up there. So we could make a trade similar to what we did yesterday. I mean, what happened here is similar to what happened yesterday, right? Is they were kind of turning down, and then all of a sudden it's just something swoops in and brings us up. I guess there could be currency intervention going on there. But the thing is like when we got the currency intervention yesterday, they didn't keep going. They kind of they had a big swing up past the midpoint, and then they just kind of left it alone. And that there was a little bit of a move further after we were traded, but eventually it kind of came back to where it was by the end of the day. So I'm a little bit concerned about that sort of a thing right now. That's like, they could break a new high, but then like come back to 13.5 eventually. You think it's the greatest show ever conceived by human mind? Oh my gosh. I don't think that any show deserves a title that great. Oh my gosh. So are we in an uptrend? It appears to me that the flows are long today. But it is a little iffy. It is a little iffy. Yeah, the favorite is Trump. The guys tonight have no chance. Well, we'll see. I hope that's not true. Like the honest truth is, I appreciated Donald Trump for trying and for the service that he did give. I didn't think that he was an awful president or anything like that. And I'm not sold on some of these things that like he's a chronic narcissist and did all of these illegal things and yada, yada, yada. I feel that that's largely political prosecution. But at the end of the day, I do not believe that he was as effective as I had hoped. And furthermore, I no longer believe that the message and the policy and everything that he was pushing is really appropriate for the current juncture that we sit at in the world. His whole campaign, the thing that made him popular was being anti-globalism, essentially, right? And guess what? He won, kind of. It wasn't because he won. It was because of the Ukraine war. After he was out of office, the Ukraine war happened, and then everybody started deglobalizing. So that's not the top issue anymore. So I really don't feel like going full ham on that one. To the detriment of the party, because he is a huge millstone around the neck of the party, is the right call right now. I really think that the best thing for the GOP would be to say, thank you for your service, but we need to move on. You were talking about Mr. Robot? I don't know what you're talking about. The best thing for the GOP is to be more like Democrats? No, it's not to be more like Democrats. That's silly. Okay, but you don't need to be conspiracy theory. Like, that's the whole thing. I do think that the biggest problem that the GOP has at the current moment is I want to call it like how should I describe it? They are behind the times in terms of economic understanding. The large section of the GOP is still stuck in the 70s where they think that the gold standard is everything. And they want everything to go back to the gold standard. And I think that's one of the biggest things that's holding the GOP back. Because if the GOP came back to a sound understanding of economics, kicked the libertarians to the curb, and that doesn't mean that they would go Democrat. That doesn't mean that they would go Democrat and neo-lib, stimulate the economy, give the government control of everything sort of nonsense. But just a Republican approach to the economy that is correctly informed by economics, and I think they would just crush it. No, because the issue is not like you print infinite money, right? So how far back do I need to go here? Okay. I think that you need to kind of go more back to the 80s and look at what we learned from the 80s, okay? So the government is a crucial partner with business. It's just unavoidable in the modern world. Government and business have to work together to some extent. But you don't want it to turn into picking winners and losers. And more specifically, you have to be very, very cautious about just throwing stimulus out there willy-nilly and not letting it be targeted and giving it all to consumers, because when you give it all to consumers, they will just use it to consume things, and that's when you get inflation to go up. So the government needs to make smart investments that incentivize being producers. You need supply side stimulus. Okay. After the pandemic, that's what should have happened, is there should have been supply side stimulus, and it didn't happen, and that's why we got inflation. Right? So the way that the gold bugs would say is, oh, we've had an economic disaster. The government should sit by and do nothing and just let there continue to be a disaster. And then it probably wouldn't be until there's like a depression and the voters absolutely demand it that they would give in and they would start doing the stimulus again. Right? So I guess it is Keynesian. But it's not the Democrat approach to it, because the Democrat approach to it is like modern monetary theory, which is tax the F out of everybody so that they're so dependent on economic stimulus to do anything that the government basically gets full control of the economy at that point. That's what modern monetary theory is all about. It's about hijacking the economy by taxing the crap out of it and then using stimulus to force the economy to do what you want. That's really what that's the end effect of modern monetary. You don't want to do that. Okay. Where are some other places? Republicans are 100% right on immigration. When we had like this kind of armistice on inflation for most of the 1900s, immigration wasn't an issue. Yes, we should have strong border controls. We should have a limit on the number of people that come across the country. We should have a better system than, if you're family. We should have a merit-based system. Those are all Republican things. So that's great. That's a great part of their platform. 100% I agree with them on immigration. Okay. On foreign policy, they kind of have it right on foreign policy, because we got to get away from this allowing the military industrial complex to like control everything. That is absolutely is a thing. It sure feels to me like it's like as soon as you get a military industrial candidate president in the office, all of a sudden we're in another war. Kind of seems suspicious. Okay, so I totally agree with that, but I don't agree that we should just like abandon allies and commitments around the world. When we've made commitments, we need to follow through on them. A large portion of American prosperity is dependent on the relationships that we have with other nations. And if we start doing things like leaving Ukraine high and dry, nobody will trust us, and it will have a significant impact down the line on American prosperity. But what I just said is the traditional Republican opinion anyways, or at least that's always been the opinion in my lifetime, letting unvetted people stream across the border is a Biden policy. On social issues, I almost solely come down on the Republican side, right? Like, you got to push back against the left on all of these woke issues, okay? It's great to try and help people that are disadvantaged become successful. It is not effective to just hand them things that aren't earned. Okay, you cannot improve the lot of people's lives by destroying meritocracy. Okay, you have to teach them how to be successful within the meritocratic system, because nobody becomes the best version of themselves through entitlement. Right? And this other stuff like giving kids, cross-sex hormones or puberty blocking hormones, that should be illegal in my opinion. It's not healthy for the kids, and it's not backed up by the science. I thought that maybe we'd have a chance for it to come back here, but they're still going, aren't they? I could have gotten in, and I was wrong. right? It's not that the Republicans need to be more like Democrats. They should be Republicans. They just need to acknowledge where the data, the truth is against some of these conspiracy theories. And the problem is that there are a lot of smart people in the party that studied economics for a living, or studied policy on various different things and understand it. And when they try and tell people, about it, everybody just goes conspiracy theory. Well, you're just part of the globalist establishment trying to enslave us all. And they get ignored. That's the biggest thing holding back the GOP. It's the conspiracy theory, right-wing nut jobs. And if it wasn't for those guys being so dominant in the party, the GOP would be dominating elections across the country. We wouldn't be in this situation at all. Geez, oh geez, that's really going. There's got to be some stop runs involved in this for sure now. Because the 10-year turned up in a big way, and now we're at 4.25. That sucks. I mean, in that situation, I didn't lose money, but I definitely made the wrong call there. I was unsure about, I kind of felt like maybe 13.5. There was a pause here. I was skeptical about its ability to just like shoot up again. And a really, really powerful flow came through there. Yeah, buy the high. I can't, I don't think I can buy that one. I'm awfully tempted to. I honestly, at the moment, I kind of feel like maybe I need to, well, I don't know. I feel like that I'm out of alignment with the market enough that maybe I shouldn't try trading it. But I did call it the flow correctly. Like, when we were on the downside, I ignored it. I said, I'm not interested in that. I specifically said it too. I was like, well, I know that we're yapping and maybe we should be paying attention to the market, but it's going down. I don't care about that one. Then it turned back up. Okay. I missed the initial move up, and then I had a spot to get in at 15, and I said I want a better price, and I missed it. So I called the second leg of that flow totally wrong. Not totally wrong. I mean, I didn't say it was going to reverse or something, but I screwed up. I totally screwed up. I have to factor that in. Yeah, give a man a fish and he will have a fish for a day. Teach a man to fish and he will have fish for a lifetime. Well, I think that most people in America have fish. Like the amount of people that are in like abject poverty is pretty low, right? But I don't feel that the majority of Americans believe that they are being enabled to become their best selves, to have the degree of success that they believe that they're capable of achieving. And I think part of it is that the economy is kind of tilted against a large portion of the American public. Like straight up right now, the way that things are going, if you're like in tech and some of those industries that are doing really well, you're doing really, really great. And if you're like on the trades side, it is the field is absolutely tilted against you. It's like with the trades in particular. I think this is a really interesting one because there is some very good reasons to get into, quote, trades, like to become a plumber. There are some cities right now in the United States where, like, if you have a plumbing disaster, you have a plumbing emergency, you might not be able to find a plumber. They're just like booked out, right? That would be a situation where that labor is in demand. So I would think that you should be able to do well. And if you are an experienced plumber and you've built up the business yourself, because it is one of those things where it's kind of more of you run your own business sort of a thing, you can make a lot of money. You can make six figures. You can make, upwards of 200,000 doing those things. Absolutely. But not very many people want to do them. Why is that? Well, I tell you why. Because it's a lot of work and they know that the system is tilted against it right now. HVAC, I paid $250 for a visit and I was using a friend. Wow. Yeah. There's good money over there in the trades, but there's so much. Sorry, the news squawk just started saying stuff. I am kind of wondering on this upside here. It was a little bit overly strong. Yeah, it's outright usury. Well, but the problem on the trade sides is there's so many regulations, barriers to you being able to start your business, drama that you have to deal with, you know, like people don't pay up, you don't, they dispute your work. There's all of these headaches. Nobody wants to deal with it, right? Like there's a real problem here when there's that much demand for something and it's something that so many people in the past used to do. That was like the majority of what people did. And now nobody wants to do it. That I think points to a systemic problem, a systemic failure in our systems. Yeah, it's just like starting any business. True. But it's just I think that the economy and the regulations have become tilted against small businesses. Uzi, you know it more better than any of us here in this room, at least. There's a lot of barriers to running a small business. And then on top of that, they're like, oh, okay, we're going to do COVID restrictions and put you all out of business. Ugh, terrible, right? And there was 100% this thing during all of that, where it was like, okay, why is it that all of the small business had to shut down, but you don't shut down Walmart? Well, because Walmart has the money, of course. Thinking about that one makes me mad. It really was like, there was a period there where it was like, the only time that you go out in public is to go to Walmart. And they don't have any restrictions on that. Millions of dreams will be shattered in a decade when kids realize they can't be YouTubers. Nah, I think it's way worse than that, Uzi. I think it's way worse than that. I think that there are going to be millions of kids that do the YouTube and have moderate success with it. And once they've invested enough in it to have moderate success in it, they're going to realize that they hate it. That's the way that this is actually going, is that being a content creator and an influencer is actually a really shitty job that you really don't want to do. And kids only want to do it because they've been taught by social media to be narcissists. And they've been taught that those influencers are the ones that are at the top of the social hierarchy, and that's why they want to go it. And what they don't realize is that what is necessary, the type of work that you have to do to sit in that position is absolutely insane and ridiculous, and you will just hate it. Yeah, man. Our business was literally sliced in half, and it wasn't because we were locked down for all of 2020. It's because people were terrified people are not good customers. Yeah, that's true. Well, everybody pulled back on spending and saved a bunch, and yeah, man, they're still going there. Although I do see a pretty decent amount of volume traded at 18.5. Everyone pulled back on being in the physical presence of other humans. Well, I think there was a couple of different things across the board, right? Because during that March, I think that everybody pulled back on doing everything. You know, I think that for most other businesses, it was worse than that, because then you had this whole year of difficulty, if not 2 or 3 years of difficulty. Like restaurants. I think restaurants have probably been the ones that the hardest hit, you know, like I still see like holes in the food market in my local area now. It was like, you know, all those businesses went away and very few restaurants made it through it. And so there's not very many like sit down restaurants. Man, this is not backing off at all. I am way misjudging this. What am I missing here? I'm having a hard time understanding how the flow can be that strong. It was almost 20,000. It was actually, I would say, since we've started, it's probably more like, yeah, well, let's see here, 12 to 37. So I guess about 20,000 contracts. 20,000 contracts long. Nice move in the yen, you're correct. Is it all just about the yen? Could be. I also wonder, though, the thing that we were talking about at the beginning of the stream, which was the jobs revisions, the PMIs, all of the sudden the narrative has shifted very, very quickly in favor of that maybe those interest rate decreases are closer than we think. Because one of the things I was thinking about at the time was, well, you know, probably the correct play in this situation is to go long the treasuries in the hope that you get a pop on PMI. Obviously, it's like way too late for that. Office buildings should be converted to condos due to the rise of remote workers. Yeah. The remote worker thing is a niche interest of mine that I find very fascinating, because it seems to me that the majority of workers out there can totally get by working from home. The vast majority of workers out there that were working in an office didn't need to. They weren't collaborating and working with people nearly as much that it would be necessary to be like right there. Okay. But there are some industries where there is a real advantage to all being in the same location. And for some reason, the industries where that would be the most beneficial are the ones that are getting the most pushback about, returning to the office. Like, if you're in the finance industry, if you're trading, man, if you're trading for a bank, are you doing investment banking for a bank? You know, you work for Goldman or JP Morgan. You're not going to do that job as well working from home as you would being at the office. And it's so ultra competitive in that field. 100% they should be returning to the office. But that's one of the ones that people are citing the most and are like, you know, I find it so interesting that that's one of the ones that the people that are advocating for working from home talk about the most, because that's one of the cases where it was most justified to make people come into the office. I think there are some things in tech. I feel like for what I do, that it would be better if we were working from the office. But I mean, it works out. But we did get a small pullback there in the treasuries, but I still kind of see pressure. Yeah, to all the hero trades that died on the battlefield today, my condolences. Do you think that a lot of people would have tried reversing that trade? I could certainly see when we were back at like 16 and we kind of built out some volume there, right? I could see people going for the reversal, right? Then we had that move higher. Okay. The people that, if you like tried going short from like 18 to 21, that was dumb. Shouldn't have done that. that was a misread if you tried shorting that. I bet you there was plenty of people that did it though, because when you look at the charts and all of these sorts of things, I can see plenty of reasons why somebody from a technical analysis perspective would have tried to have justified that it will turn around. And I mean, more broadly, again, I misjudged this big time because my analysis coming into this was that it's different from yesterday. We're not getting the kind of speculative fervor about increasing rates that we were yesterday. We're way far away from that, so there's no chance that we're going to meet new lows. And there's an auction, so I was expecting this to be a little bit more of a range-bound market where the auction was the most dominant factor, and instead this long-only flow came in, just seemingly out of nowhere, that I wasn't expecting at all. It really was a lot of contracts long. Now, is it because... Well, I don't know. I think that we're going to want to try and find information about what the flows were to see what is coming in. Are CTAs flipping in the treasuries? That could be happening. It could be CTAs flipping and or getting stopped out. Could be part of why we're getting such a strong flow to the upside. I think that has to be involved here because definitely a lot of the orders that I saw coming out there looked like stop orders, right? And, you know, really big guys very aggressively hitting the offers. That's, you know, some panic there on the part of those guys. But I also wonder if there's a bunch of people on the discretionary side turning around and saying that that's it for rates. I mean, to come back from 4.32, 33 or so, come all the way back to 4.25, I think that's a pretty conclusive move. That says to me that at the very least, the short flows are exhausted. There's nobody else left to go short. So here's an interesting story that you might want to keep an eye on. And I can't say this guy's name, but it was Bitfinex is retweeting him. Crypto creep points finger. Sam Bankman-Fried intends to blame FTX lawyers for fraud, his lawyers say. He's going to say it's not my fault. It was these other people at the company that did the fraud. That's an interesting bid there, 19.5. Although I would point out that when we started to get that sort of stuff yesterday, that's about when things moderated, if not pulled back. Yep, thank you, NASDAQ Technologies, for reminding me. We've got the PMIs here in about 3 minutes. That's important. And normally I would be hearing my news squawk in my ear at the moment telling me about what the numbers are supposed to be. So I'll refresh and make sure I've got that right. Okay, so we're looking for S&P Services PMI Flash 52.2, Manufacturing 49, and Composite 51.5. So especially if we came in and like Composite was negative, that would definitely be like cause a shift in the market. But I have no clue what they're going to be. Maybe they end up being services ends up being better than 52.2. If that's what happens, I probably want to go on this flow reversing. So we might have a good opportunity set up here where the liquidity below us is vulnerable in case these numbers actually are better than expected. Chris Books, good morning. Welcome to the stream. I'm just coming in here, checking a couple of things before the news, just to be sure. Tesla shares slip after report the company has lowered German gigafactory production targets. More stuff about the Indians landing on the news, which is a very interesting moment. Okay, here we go. Well, the treasuries are definitely pulling for it. So like I said, S&P PMIs are not as influential, but the market has still been paying a lot of attention to them lately, especially the treasuries. We got a full pull on the book. Okay. Yep, the numbers are lower than expected. So services is 51 versus 52.2. Manufacturing was 47 versus 49. And composite is 50.4 versus 51.5. So they push higher. Now, given the situation that you might see strong pullbacks because, you know, how much of that was the market front running it? Who knows? We have 30 viewers today. That's cool. I appreciate it, guys. You give the channel a like. That helps us out. Yeah, the yen really shot up there, didn't it? And look at the dollar. The dollar getting crushed. Really all of the currencies profiting here at the expense of the dollar. And but you know who the real winner is today is silver. Woo. Silver up 3.22% on the day. Yeah, the dollar fell off a cliff. Today's action is this is going to be a banner day, I think, because you know, not only did the whole narrative and sentiment change today, but it did so in such a big way, you know, like I think especially here in the treasuries that it's just really catching a lot of people off guard. You know, like the market is just not prepared for it at all. Now, the equities are not getting crushed. That's one of the things that I think would start to happen here is the equities start to price in a recession again. What's happening in ZN? Oh, it's just been a really strong bull day in ZN. So strong bull day in ZN, and then you had the PMIs, and the PMIs were lower than expected and pushed the treasuries up even further. I mean, if we had just taken the long at the very beginning, you know, just like the total speculative trade that I probably should have taken. This is what, it's 28 right now, and we're all the way down below 22, so that's already 6 basis points. It sucks that I've been missing a lot of the largest moves, but sometimes the largest moves are kind of like freaks, right? Like, part of the reason why they're so big is because nobody's expecting them. Jeez. Like, they're not. I was expecting a big pullback off of that, but they're still pushing. They're still pushing. I find it really, really hard to go short for 215, though. They kind of look destined for 4.2, though. Yeah, crude continues its fall. Did crude... Well, crude's not reacting as strongly as the other instruments, but crude is definitely down today. What are they at? Down 2.44%. It's definitely an outlier in terms of losses because the next biggest loser behind that is natural gas. What do you think about accumulation, manipulation, distribution, or power of 3 trading? That's nonsense. I mean, so it's totally a thing that a large hedge fund or sovereign wealth fund or what have you will buy something, accumulate a bunch of a thing, or sell a bunch of a thing, distribute it, okay? But the things that the retail traders believe about what is accumulation and distribution and how those are executed and so forth are nonsense. So when a large entity like that accumulates or distributes something, it will move the price. So this idea that it's like, as it's going sideways in this area, that's them accumulating is not, that's just not the way that it works, right? But the bigger criticism I would put about it is that it's technical analysis. You're trying to identify when accumulation or distribution is happening on a chart, and then as a result predict what's going to happen based on the past market action, and that just doesn't work very well. The better thing to do is to know when somebody out there is going to want to be buying or selling something, and then just get ahead of them and let their buying or selling move the market for you. Well, if you're making a killing with candlesticks catching the largest moves in ES, take advantage of it while you can, because I almost guarantee you that won't last forever. Okay, so a little bit of a distribution at 25 now. How do you decide what news impact what? I cannot trade the right thing at the end time. Please explain. Okay, I'll try and explain. So markets, orders have a very strong impact on markets. So they went and they did this study. Wait, let me back up. I'm trying to do better about this. Okay, I'm going to explain to you why strategies like just using candles and looking at past action tends to not be very effective. And if you are having success with it, that it's likely that at some point that signal is going to start failing. Okay, so the reason why this happens is because orders have a very strong impact on the market. So they did this study where they said, if you put $1 into stocks, how does that affect the overall market cap of the S&P 500? And you would think if you put $1 in, it should make the market cap go up by $1. But they actually find that that's not the case, that it goes up from $5 to $8. So you put $1 in, market cap increases $5 to $8. Okay, so the impact of even a single dollar on the market is 5 to 8 times more than a person's natural intuition would believe. And so what happens is we all come in here and we think, well, my orders don't matter. Me and all of the other people that are trading this thing, we don't matter. But the reality is that your orders do have an impact. And it follows the square root law. And this is one of the most heavily tested, verified results in quantitative finance today is the square root law. What is the square root law? Well, a square root law basically says that the impact of a large order that's split up over time scales as a square root function. So the formula, I'll write it out for you here, is y, which is a scalar for that individual stock, omega times the square root of the size of the order over the total volume for the period. That's the impact that it has. So if we were to come in here and say that the size of our order is 1% of the volume during that period, so basically it's 0.1 V, right? Then the V's cancel out, and basically you're left with y omega times the square root of 0.1. And if you can remember back from your math class, when you take the square root of a decimal, it basically, the square root of 0.01. So if it's the square root of 0.01, that's y omega times 0.1, right? That's the square root moves the decimal over 1 point. right? So what that means is 1% of the volume is responsible for 10% of the volatility. So all of your little orders here on this candlestick pattern that you think doesn't matter, actually, it matters a lot, especially in a place like this where you kind of have this, you know, we've created this range, you know. All of your little orders taken in this range the market reacts to quite strongly, right? So what it means is that if there's some sort of pattern that really truly is consistent, right? People will notice it, they'll start trading it, they'll start sizing up, and they get to the point where that signal moves the market and erases the signal from the market very, very quickly. It happens very, very quickly. And then the thing is like, if it really moves it, then everybody's going to try and get the signal earlier and earlier and earlier until like the signal just doesn't even happen anymore, right? And what you're left with is noise, right? If you've got something that's really, really working, the market comes for it. And the thing is that this is why you get these kinds of fat tails, because you might have something that works most of the time, and then the market kind of realizes it, and then they'll say, oh, okay, we're going to trade against this all the time. And so now all of a sudden, something that you think was working like 60% of the time or something like that will fail every time. And we've seen that. And I can show you back tests where it's like, it seems like this strategy was going really well for a while, and then all of a sudden it's like it became too popular and it started failing every time. And you'll see this over and over and over again. There are tons of technical analysis sort of strategies that when they backtest, they seemed to work in the 70s and they don't work anymore. So if you have a purely technical strategy and you're doing really well with it, what I would do is I would be very protective of your profits. Write it while it's working, but realize that it's probably not going to work forever. And when it stops working, you don't want to blow the account. Right? Take that money and keep it, and then use that to learn other things that are going to be more lasting strategies for you. Like, you know, understanding what the market is doing, trading informational inefficiency. Stop ignoring my questions. It hurts. Oh, come on. I go back for one. But I think that what I just talked about answers the same thing, right? What you're talking about is a technical analysis strategy, and that's the problem with all technical analysis strategies. That's why I try to ignore them as much as I possibly can. Yes, there are what you could call a technical strategy where the inefficiency that you are seeing in the market is caused by the market microstructure. And if it's caused by the market microstructure, then it should always be there. But those edges will be very competitive. You'll have to be fast to be able to get those. Usually that is the field of high frequency trading. Oh, I'm glad you thought that was interesting. So that's what a lot of my videos are about, is kind of going into more detail to explain all of that so that you can understand how we came to that conclusion empirically, right? And thus how we modify our own strategy to deal with that. Yeah, there you go. The reason for why you see this pattern happen isn't for the same reason you think it happens. Well, yeah. So like more specifically, the thing that I think people talk about is it goes like this, and then it goes up to this place, and it goes like this, and then it goes back over here, and it goes like, why does this happen? And they say it's accumulation and distribution. But when you actually watch the volume, like, are people buying down here? Are people selling down here? Like, if you could go and you could look at the number of open positions, are the number of open positions long increasing down here and then decreasing down here and then increasing up here, down here again? No. actually what you will find in those areas is that the actual change in market orders is quite low, and that it's just kind of not doing anything. And usually what's happening in these situations is that there is just some sort of a correlation, that it's moved from here to here because of the Japanese yen or whatever currency it is that's they're correlated with, and that's what's really driving the market. And then, you know, all of the decisions that you're trying to make off of this chart make no sense. Especially if it's a currency, because I tell you what, currencies are in particular are prone to doing random odd things. I look at it to tell me it's starting is different than a sit back. Well, that's one thing. Yeah. So I have a flow that I think is going to be happening, and then if I'm not seeing it, then I figure that I'm just wrong and I don't trade it. So that one was interesting. So, you know, I kind of lost track of the time. Yeah, we did just get new home sales. I didn't anticipate that new home sales would affect the market very much. It was slightly higher than expected, 0.714 versus an expected 0.704. So that one was slightly higher. Eurozone consumer confidence flash was slightly lower than expected, -16 versus -14.5. US new home sales change month over month, 4.4% versus 1%. So I think that was the most meaningful one that changed, was the new home sales. So new home sales was better than anticipated. That would be an overall negative, and we did see the market sell off of it. But the thing that I thought was interesting was that there was a little bit more of a pull and a little bit more volume trading off of that particular number than I anticipated. I kind of thought that they would just ignore it. So excuse me, I think I need to take a drink of water. I'm getting hiccups here. You know, when we start talking about the, you know, the impact of large meta orders and all of that, I definitely get excited, right? Yeah, most traders think they underperform because they can't sit back, when in reality they lack edge. And the times when they win is just a part of the variance and randomness. I think so. I mean, like the thing that I find in my own trading is that when I know what's going on, I win almost every time. When I don't know what's going on, it's kind of more 50-50, and I let myself lose more on my losers, and I think that that's my biggest problem right now. But when I really have an edge, knowing what the flows are going to be ahead of time, I win every time, and it'll be like that all month. With an understanding of how auction does not go up in a straight line. Yeah. Because the big issue, and the thing that I think I avoided quite well today, actually, is that right when you feel like I've got to take a trade here because I just don't want to miss out on that momentum, is almost always right when the liquidity hole forms and then the thing goes sideways on you for 45 minutes. I guess in this case, when we had this jump that, you know, I thought was a little unexpected, then at that point it was like 10 minutes to the news. So that one wasn't quite the same. But, you know, I'm not as interested in getting involved in this area right now, because this is a clear liquidity hole that's range that's formed after the news. I suppose that if I wanted to get in within this range that below 25 is acceptable, probably better if you get 24. But There's also a really, well, not a really good, but there's enough of a chance that I'm wary enough about it that they slip back through to 20, because the support in this area that didn't trade very much is not going to be very strong. Yeah, gold has been strong. So I still have some silver in my portfolio, and I think I still want to have that. Because I think that if these flows continue through, yeah, I think if it continues to be like this, that we're going to see 2,000 gold real soon. You know, probably well before the end of October. So what actually works, considering that you know what doesn't work? Well, it changes every day. That's kind of the funny thing, right? So if there's a pattern and the market is able to identify patterns really well and get rid of them, then what you need to do is you need to go in and find the things that could potentially predict what the flows are going to be that day. And these are things that change literally every day based on the news and the economic narrative that's out there and all of these other things. So you have to take it day by day and say, what are some pieces of information that I know that might predict future orders? And then if you understand that market really well, you will understand the things that are going to drive the orders that day, and you can make really, really good predictions. And you end up being right like almost every time, like I said. And that's what I would say the approach that we can take that is the most likely to yield results for you. Now, what we're talking about doing is extremely difficult because you have to be very informed about the market, and there's still a lot of risk taking involved in it as well. Okay. But you're more likely to have success over time doing that than you are trying to trade chart patterns. Why don't you? Well, I just explained it. Oh, sorry, you kind of missed it. To summarize, the strong impact of orders causes the market to be very statistically efficient, and so technical analysis isn't very effective. Certainly, especially when you're looking at technical analysis on like 1 minute charts, okay? So they did take 23.5. There was a decent amount of liquidity there. Nobody's hitting 23. Okay, but there they take it, and as anticipated, not a lot of liquidity there. Do they keep going? Okay, a little bit more pushback at 22.5. So what we're seeing here is a stylized behavior of liquidity. Because we went through this area so quickly, and there hasn't been enough time for the liquidity to build up in here, when we come to these prices, they're able to slice back through it very quickly because there's just no liquidity there. So if they decide to go for it, if selling materializes, there's not going to be much liquidity for them to sell into, and you end up retracing a lot of this. Will they make it back to the 20.5? I don't know. I think there was a little bit too much there traded at 22. So I think I would say for those first two ticks, it was pretty weak, but now I'm starting to see it a little bit stronger than I anticipated, so. Oh, wait, what did I just do there? took that the wrong way. Okay, so I am seeing a little bit of the resting liquidity looking a little weak there at 22.5. Well, it has. Well, you are going to think that you see behavior, but like as soon as y'all start trading on it, it's going to change, right? If you take like higher time frame sort of a things, that might be a slightly different thing. So noting a little bit of back and forth here now at 22. Iceberg at 22, they tick down. They were all being proven wrong. Well, it's not even like, I think the way we should say is we're open to that there could be an edge out there, but we really have to prove it statistically. You know, like the thing that I find so interesting is that I certainly can find people that they claim to have had some success with technical analysis, although I would say that the time horizon which they've had success on is not large enough. Okay, but I've never, ever seen a back test of a pure price-based indicator providing edge over a 5 to 10 year period. Not even close. Like the holy grail, let's say, of technical analysis would be you're only using price information and it provides a Sharpe ratio over 0.5 and profitability over a 5 to 10 year period. I've never seen it. Not even close. And I've back tested a lot of strategies. Well, it looks to me like I got in this too early. And that, that it's, the trade is bad. I got it wrong. You know, it's going to be interesting today when the 20-year auction comes to see how much demand there will be, because, you know, it's kind of looking like the auction might be good today. Okay. Better be good. If you have a Ninja Trader strategy, I can pop on here on a 5-year time period, and it shows me a Sharpe ratio over 0.5. I'll be super impressed. I'll be like, okay, here's what we use to start our hedge fund with, like that. Okay. 5 years seems to be pushing back up there. 10-year, a little reluctant. And that liquidity keeps pulling. I love me some 808s like that. Okay. Uptick, but no holds. A little better. Okay. It's good. It's good. Okay, so a little bit of some positive ticks in our favor and the cumulative delta coming back up here. I'd say it's still pretty tight, so I don't know if I'll actually take the profit over here, but I am going to see if I can sneak my way into the liquidity here. You ever felt the need or found it useful to add a historical DOM overlay onto your candlestick charts? So like the, sorry, what do we call these? Like, Jigsaw calls it a Vista chart. They can be useful, but while I'm trading, I don't. So like that's the kind of the weird thing about it is that when those things are useful, or why those things would be useful is to see why did it happen in a certain way? What were the conditions at the time in the past, right? But the issue is kind of that is, especially when it comes to the order book, like after 45 minutes, it doesn't matter. And, you know, I'm sitting here watching the whole time, so I don't find a strong need for it. You know, it's something that if something really weird happened overnight, I can pull it up and look at it, but it's once in a blue moon that I pull those out and really find those useful. And kind of more broadly, I kind of find this idea of like, that's where your edge is going to come from, and you just look at that and everything to be a little ridiculous. Because that's the way that like I feel like Bookmap sells it is yes, you get so much informational content from this thing that that's all you need. And I just don't believe that's true. I just do not see any evidence for that. I have this line drawn on this exchange. I don't remember why I drew it there, but they've like come, the Japanese yen has come just above that line and is now kind of chilling. And like, dude, that's so bizarre. I don't remember why I drew that line. That was like some sort of a line in the sand that traders or the Bank of Japan thought was important. And I drew that like months ago. Okay. So I don't know why, but like the way that the 6J is holding to that so closely is a little eerie to me. You notice how Bookmap never has examples with treasuries? No, you know, I haven't noticed that. I think that that's probably just because equity indexes are so much more popular. You know, like if I'm trying to sell a trading platform, treasuries are the last thing that I would show because not very many retail traders trade that. Yeah, we're going to get the crude oil numbers here. Crude has kind of reversed its losses from the past hour. S&P 500 is buying. Oh, there's the treasury up 2 ticks all of a sudden. Like just as soon as it seemed to have established a range, it breached it on the upside. Pretty big take there at 22.5 though. 2,000 contracts straight down. Goes bid again, but that was a little curious. 5 years still looks pretty bullish, but there has the cumulative delta is kind of turning down, so it's a little bit kind of on the line here right now. Not necessarily the way that I would prefer this to all play out. Iceberg at 22.5. I'm probably getting a little bit too focused on the flow right here. I don't know if it matters too much. There you go. Okay. Interesting. Okay, so 24 or so is about where I expected us to bounce back up. They could go up to the highs, who knows? I was merely, the play I was trying to make was merely about the liquidity across that range. And because it was purely about the liquidity for me, that's why I'm kind of already have the limit order out there and trying to just take the quick profit. They're gonna have to hit me though. Okay, there we go. Thank you. I as soon as I say that, somebody does it. So sometimes I wonder, because we've had this discussion about market efficiency and everything, and I share that because that's how I came to learn this stuff. You know, I'm sure that something that would make a lot more sense to people and would probably be better from like a marketing perspective would be to say, just trade the news, man. Just trade the news. I don't like to say just to trade the news because it's more complicated than that. Like there are things and flows and stuff that I use to determine which direction it's going to be going that day that is more complicated than just the news, you know? But like that's the way that most people understand it. So I'm sure that if I said, oh, we just trade the news, that I would probably get a lot more people, you know? I don't know. I so much go back and forth on this thing sometimes, guys. Like sometimes I'm like, it's our duty to share this information with the world. There's a lot of beliefs about the market out there that are just based on false information, and we're making societal level decisions that are just bad decisions because of this misinformation, and we need to teach it to people and get this as widespread as possible. And then there are other times where I'm like, you know what? Like, I can just do my own thing. I don't care if this gets popular. I don't necessarily want to deal with the problems that come when you get popular, and I would rather just be left alone, you know? And I go back and forth on that so much lately. Like this past week in particular, I've really been like, you know what? I really don't want to deal with the problems with being viral. It kind of sucks. I look at what happened with Linus Tech Tips, and I'm like, I don't want to be that. Because I was thinking like, well, we need to become like this a YouTube viral sensation that results in a hedge fund and opens up hedge funds for a large portion of people and are at the front of a social revolution in investing, you know. And now I'm like, no, I don't think you want to actually do that. That would kind of suck. You know, everybody be gunning for you. You make a wrong call and you know, everybody hits you for it. The fall is great, etc., etc., etc. When I could just sit here and do my own thing and be happy. You know? Like Linus Tech, this is the funny thing with the Linus, I keep coming back to that, but the thing that I find so ironic about Linus Tech Tips is that it was like a year or two ago, I think there was actually 2 times in particular, where Linus was like, you know, maybe I should retire. Maybe I should just let the company go on its own, and they can make the content and they can do it without me. And yeah, they won't get as many views without me, but eventually they'll work it out and it'll be fine, right? And I just want to do my own thing and not deal with it anymore because it's too much stress and work on me, right? That's what he was saying. And you know what? If he had done that, he could have retired the millionaire and be happy. But you know, we kept him. He kept going, and then all of this drama happened. And I'm sitting at that, and I'm like, I don't want. Am I gonna run into that same situation eventually, where I was like, you know, I should have just, you know, gone away and done my own thing. I've done my job, and now I just want to be alone. No, that would be a bad thing. Like that's what I want to do. But I know that would be a bad thing. I feel like I'm already too socially isolated. Like. I interact with you guys more than, well, you know, of course the people at work, but you know, it's work and on Sunday, but other than that, you don't do too much with people. Oh, well, I do stuff with my uncle. That's, you know, I'm really, really grateful that I've been able to do this woodworking stuff with my uncle. And I hope that we continue to do really cool things with that. Cause I think learning to make things and learning a skill like that and spending time with family has been like a really rewarding experience. But I also feel like I should be like having parties and knowing all these people and making all of these connections and stuff like that, and I'm not doing that. And then here I am like talking about like isolating more. No, I shouldn't do that. You can understand the temptation, right? Well, it's interesting. I feel like they've come back. No, it's only been 2 ticks. I don't know. For some reason, I felt like that this came back in a meaningful way. Let me just clear the DOM, because that's probably why I'm feeling like that. Because I was kind of wondering, was my exit there bad? Well, right now it looks like freaking genius. Like, I caught it and it was amazing. Kind of lucky. But I think I read the flows really, really well on that one. It's too bad I wasn't able to read the flows way back when we were at 2.7. Ugh. But a win is a win. And you know what? Despite our bad luck yesterday, we've been trading pretty good past little while. So I feel that today we were a little bit ahead of curve. We weren't far enough ahead of the curve to have really made big money, but I think we're generally in line, and we should feel good about where we're at. Because you get this thing where it's like, you know, if you kind of understand why the flows are coming in, then you can spend all of your time thinking about what's the next set of flows that are going to come and doing that analysis. If you didn't understand, then instead you're spending all of that time trying to understand the past flow, and you just fall further behind, right? Right? That's why I think you'll run into this thing where it's like when you're doing well and you understand that market, you never lose, and then when you don't understand that market, you lose every time. I think that's why it happens. Okay. So, oops. Okay, so now they went past my exit. That was just a few ticks up. We'll see if they make a push at the highs or not. I'm a little bit skeptical about their ability to make a new high. Usually after a news event like that, it's really, really hard for them to get back up there. Because they made that high on low liquidity, and the liquidity is going to be a lot tighter here. And let's see here. It's been about 15 minutes. Let's say actually since the last time we were in this area, it's been about 30 minutes. So, you know, they might need a little bit more time for the liquidity to completely recover, but I do think we're in an area where it'll be a little bit of a push. It'll require some heavy lifting in order to breach the highs again. But we've certainly in the kind of flows today where that's what the flow is, it could definitely happen, right? It could definitely happen, although it is less likely. I should come over to Zero Hedge and look at their synopsis of the PMIs, huh? And they have a story about Biden administration welded open certain gates so that people can cross the border. That one was like, what? Okay. U.S. PMIs signal stagflation, service sector slump, price pressures mount. After Europe's disastrous PMI this morning showing stagflationary threats rearing their ugly heads, hopes were for some stability in U.S. PMIs, but there wasn't, as the flash August print missed across the board. Manufacturing was 49, services 52.2, and composite 51.4. 7 of the last 8 months have now been in contraction for manufacturing, and services dropped to its weakest since June, catching down to manufacturing. Commenting on the data, Chris Williamson said a near stalling of business activity in August raises doubts over the strength of the U.S. economic growth in the third quarter. The survey shows that the service sector-led acceleration of growth in the second quarter has faded, accompanied by a further fall in factory output. Companies report that demand is looking increasingly lethargic in the face of high prices and rising interest rates. The resultant fall in new orders received by firms in August could tip output into contraction in September as firms adjust operating capacity in line with the deteriorating demand environment. Hiring could likely soon turn to job shedding in the coming months after a near stagnation of employment in August. Rising wage pressures as well as increased energy prices have meanwhile pushed input cost inflation higher, which will raise concerns over the stickiness of consumer price inflation in the months ahead. One upside is that weak demand is starting to limit pricing power, which should help keep a lid on inflation around the 3% mark. Is bad news good news again? Question mark, says Zero Hedge. I want to highlight that last bit that they said right there from, who was this? Chris Williamson was saying that? Yeah, Chris Williamson, who is the chief economist at S&P Global and has basically had time to look at these numbers and comment on them, right? One upside is that weak demand is starting to limit pricing power, which should help keep a lid on inflation around the 3% mark. Interesting 3%. Because the concern that was pushing us before was that we're not going to be able to get inflation back to 2%. It's going to be at 3%. So stagflationary indeed. But the shift that we're seeing now is that they're starting to say, well, the economy is going to be weaker than we anticipated. That doesn't mean hard landing, not yet. I don't think it means hard landing, but it's going in that direction. Now, I would say, based on the way the S&P 500 has reacted here, and let's pull up a volume profile here so that we can get kind of a better view of that. Okay, I would say that the way that the S&P 500 is reacting today, that they think that interest rates maybe not being so aggressive is a good thing, that those numbers are a good thing, which I'm not so sure is the right call. Because I'm thinking maybe not a hard landing, but I'm also not so sure about this other theory about, that rate decreases are coming sooner. Because if the concern is that we're not going to get back to 3%, then that still supports the higher for longer narrative. And that would support interest rates being back above 4.3, right? But that's not what we're seeing today. Today we're seeing the flight to safety on that they will decrease interest rates next year. That the economic weakness will be enough that the Federal Reserve will decrease rates. So you can see it's a difficult call. But it does provide some trade opportunity. And I do kind of suspect I am still concerned about the 3% interest rates. And if we're still going to see interest rates at 3%, then that news that we saw today is not actually a good thing for the S&P 500. Now, let's see how it plays out over the whole day, because sometimes, the initial move isn't right, and maybe they end up down on the day. It did just see, as I'm yapping here, you guys all must be selling it or something, because as I'm saying it, I feel like the S&P 500 is turning down, but oh, what an interesting game we play, huh? Now let's also look at the new home sales. After the disappointing decline in existing home sales, new home sales, of course, saw a big upward surprise at 4.4% month over month, leaving year-over-year sales up an astonishing 31.5%. The divergence between new and existing home sales continues to gap wider. As a reminder, we've seen huge downward revisions to new home sales figures this year. Yes, because the supply in existing home sales is even worse than in new home sales, because nobody wants to sell when they got the good interest rate. which helped push median new home sales prices back up in July, even as mortgage rates began to spike. Finally, we note the dramatic gap between the current 30-year mortgage rate and the effective rates that borrowers are currently paying on their home loans. They are trapped, yes. The gap hasn't been this wide since the early 80s, which helps explain why inventories of existing homes for sale are so low, and thus new homes subsidized by home builders is the only option for many. Oh my gosh, yeah, that is quite a subsidy. Are home builder stocks starting to catch on? And they're pointing out that home builders have significantly underperformed. But how long can home builders continue bleeding profitability to fill that gap? And it looks like the Treasury's slipping back down here again. Overall, I think the trade that I made was a good call. Oh, did I only make... No, really? I guess I don't think I got the price that I thought I did because it says that I only took $9. Wait, does Rhythmic say the same thing? Darn. Oh, that's okay. Sure that if I had moved my order that it wouldn't have been much of a difference. Maybe would have had to wait a little bit longer, but it did eventually come back up and take through that, go well through that area. So I think we're okay. Oh, and we only have 15 minutes left. Session went by quickly. That actually was quite a bit of a drop there, now at 22. What about Twitter here? Do I need to give a little bit of a... Oh, that's an interesting thought here from Brannigan Barrett. In 2017, I did this mentoring session with traders on the floor. You do not want to impose rules to stop over trading because it will have negative implications. You want to manage what leads you to overtrade in the first place. I think that that's probably true. I'm going to rate that true because the biggest thing that prevents me from overtrading is understanding what a liquidity hole is and what causes the market to just seemingly stop and not go anywhere for 45 minutes. And these stylized behaviors of liquidity kind of tell us when is a more optimal time to take a trade. And so it's kind of hard for me to take it like, you know, lose and then get back into it and lose and get back into it. That's helped out tremendously. Other than that, though, I'm not really seeing a whole... Oh, actually, I did miss something from Nick Timmeros. Jim Bullard, given stronger growth, it seems like you'd probably follow through on the rate increase that was penciled in June. Bigger question is whether the Fed has to go even higher to 6%. I don't think markets are really ready for that. Him saying recession fears have been blown out of proportion. What's this? When I first saw one Bitcoin wallet had amassed 3 billion worth of Bitcoin, I had a hunch it was connected to the biggest criminal org in crypto. I've known for some time they've been liquidating protocols and exiting their positions outside of Bitcoin. We also know that Justin Sun felt so proud of his stolen, dirty, evil wealth that he bragged to the world about amassing 100,000 Bitcoin and proclaiming Tron is a stablecoin network for trading Bitcoin. Does anyone know where Justin Sun's 100,000 Bitcoin is? Oh boy, this is from Truth Labs at Boring Sleuth. Later today, I'll share with you the evidence to show you the largest criminal org in crypto is also the team behind Tron. Ooh, I'm excited. I'm gonna be watching for that. This is pertinent to my interests. And then what's this? Justin Sun, I am an advocate of Bitcoin, currently maintaining a substantial holding of 100K Bitcoin. Nevertheless, it's exciting to witness Tron's emergence as a stablecoin network, potentially impacting Bitcoin's value positively. Notable trend is prevalent use of USDT Tron for Bitcoin trading. I think that I am a little, I should make a note today about Bitcoin on the Patreon for the 1 or 2 people that are still left on there, which I appreciate greatly. I appreciate, but then I don't appreciate because I kind of wish that you would quit and then I would stop posting them. So I don't want to post anymore, but I will post it for you. And I'm a little concerned about possible selling flows in the future in Bitcoin at the vulnerable levels that we are at. Because it kind of looks to me like there are some big players that kind of want out. And if they get out, it's going to be ugly. Nassim Taleb, if you cause people to doubt you and then prove them wrong, they will trust you forever. Oh, I don't know about that one, Nassim. My experience, I wouldn't even say experience, observations of the world is that people's goodwill is a very short-term indicator. And that they will flip on a dime for the most bizarre reasons. Nick Timmeros, the U.S. economy added 306 fewer jobs than previously estimated during the March 2022-2023 period, according to the preliminary estimate of annual benchmark revisions to the establishment survey. This is roughly in line with what forecasters anticipated. So this was a story that Zero Hedge put out overnight, and now Nick Timmeros is saying the same thing, that the economy added about 300,000 fewer jobs than previously estimated, which suggests that Federal Reserve policy has been having the intended effect on employment that they wanted, and suggests that those interest rate decreases are maybe closer than we anticipated. But this goes up against these concerns that we're not going to get inflation back to 2% and that it might be at 3%. But who knows, if the economy gets weak enough here in the fall, and it sure is starting to look like they're setting up perfectly for a bearish fall, doesn't it? Maybe then we do get there and the inflation comes down and they have to reduce rates. Or rather, we get deflationary stuff, This all comes at a time where there's a lot of anticipation and question around what Jerome Powell is going to say on Friday. So what I'm realizing now is that Friday is going to be a real blockbuster day, isn't it? Probably more so than normal. Because often Jackson Hole ends up being like a little bit of a dud, like everybody's anticipates it, but then like nothing crazy happens. But I think that the possibility of there being extra volatility this time around is higher than the market expects. Okay, and we came back up here. So they just keep retracing this area that I took a basis point from. Wait. Oh, I just saw something about an indicator, and I was just remembering. I was thinking there, I was like, you know, I really kind of hate the whole technical analysis industry, and I just want to get as far away from it as possible. But then I remembered, well, I do have some indicators that aren't used for technical analysis, but they are useful indications about what's going on in the market. And somebody subscribed, so let me take care of that real quick. I can find my control center here. Mm-hmm. There you are. Okay. Okay. Then the other side here is that I should change the title of the stream. Narrative shifts bearish after weak PMI. I feel like that's almost understating, you know, like somebody will say that and be like, oh, the PMIs were bad. The narrative kind of shifted and they had a down day or something like that. But like, you know, the title doesn't really, I really feel like a big shift happened here today. If the sentiment overall in the market didn't shift bearish, per se, as much as there's like a real question now. Like the real decision point is now been set, and we're going to see what's going to happen over the next 2 months, right? For one thing, I think that it means that what we get over the next job numbers could be important, although I would expect those to still be like not reliable and get revised much later, sort of a thing. And we're gonna get those more important PMIs next week, right? Let me see here. And then, of course, Jerome Powell's speech will be also a really key, will kind of set the stage for what's to come next. But I think it should be next week, is it not? Oh, no, maybe not. It'll be 2 weeks from now. Because next Friday is... Oh, now that's interesting. Oh, no, we do have non-farms. Okay, we do have non-farms next week. Oh, whoa. We have non-farms and ISM manufacturing on the same day next week? Wow. Do you think it's impossible to trade not being aware of the news? Well, you can certainly try and not be aware of the news. And in fact, I would say the vast majority of retail traders, that's what they're trying to do. And surely there's some of them that will get lucky and have some success without trading the news. But I really think that the more that you know about what's going on, the better your chances are. For sure. And in fact, I think that a lot of those people that trade, discretionary technical analysis are probably factoring in news into their trading more than they realize. I like how you had to look at... Well, I try to look at the camera when I'm actually talking to you guys. I don't know. I don't know if it works too often. Because otherwise, it's kind of weird if I'm looking over here and I'm talking to the screen when I'm looking there, right? That wouldn't make much sense. Do the same thing when I'm at work. At work, they like to have the cameras on. Or maybe I'm thinking that maybe I should just get another webcam, because the whole battery and everything with this. Well, it's that or a dummy battery. I guess I should really just get a dummy battery. But I guess I'm just used to that because you're trying to trade as well, yeah. Yeah. You know what? I've put like way too much thought into the camera thing, because I would prefer to have the camera like way over this way, so that you're looking at my face a little bit more directly on, because my eyes, I've got weird eyes, and sometimes they'll look like I'm like one eye is really small and one eye is really big, and like you're like dazed or something, I can totally get that going, and so I feel like the further center you are, the better it is with that. But then if I put it in too far, you can't see the scroller in the background. So I see how much I've way overthought it, because probably none of you sit there and like care that you can or cannot see the scroller, for instance. Just renovate the room. Well, I have thought about changing this a little bit, because I have more books to put on there. You know what? I think the long, like the 5 to 10 year plan. I think the 5 to 10 year plan is we get rid of the chalkboard. I really love the idea of the chalkboard, but the reality is I just don't use it very often. So maybe I move the chalkboard somewhere else or turn it into something that I can move around. And instead, I turned this whole wall into an LED wall. You know, and then I can stand in front of it and go over what, you know, kind of like they do at the NASDAQ. That would be so cool. Yeah, I've tried to look at the ticker, but it's blurred most of the time. Yeah, I made $9 today. I took a small little scalp across that range there. Place the chalkboard with a TV and just display things on there. Well, actually, I don't know what would be cheaper, to be honest with you. I think that an LED wall would probably be about the same price, but I could make it like a whole wall. I don't know. I don't know if I'm ever actually going to do it. This just kind of comes back to this whole thing that, like, for the moment, I feel like I've kind of lost my drive to try new things with the aim of trying to, you know, help the YouTube channel be more popular and stuff. Looking for more trading. Well, less talk and more trading. Well, the thing is that the talk is the trading, right? Like when you look at the trading, you know, it's like I click the number and then I'm in and then that's it, right? If I never talked, there wouldn't really be a whole lot to see. But the reason I'm talking is because that is the trading. That's what's going through my head. That's the analysis that I'm doing to determine, do I want to get in the market or not? See? So your comment that you have right there, that immediately to me is you're looking for somebody to trade technical analysis. That's what's really going on, right? Is you want somebody to have some chart pattern and then you want to see how they trade that chart pattern. There's things that they see about it that I don't, and so on and so forth, and compare, right? There's also the times when not trading is actually no over trading. Yeah. Well, I mean, it's treasuries. I probably would take more trades if I was in ES, but I don't know if that would benefit me. The thing that was hard in ES was that I never really ever caught the big runs. Usually didn't catch the runs. I'd usually get stopped out before it happened. But that's maybe what I need to do is I need to name my stream Why Technical Analysis Sucks. Let's try that tomorrow. Should we do it tomorrow? Tomorrow will be Thursday, Friday. I think we could do it. Tomorrow, I'll name the stream Why Technical Analysis Sucks. and see how that changes things. Because I'm sure that a bunch of people will come in and want to argue with me about why technical analysis sucks, but then there will be a bunch of other people that really they are just, you know, dead set on trading technical analysis and they just won't bother us. Watching the DOM isn't enough, then I'm just having a hard time. It's correct. That's correct. So understand that there are some real edges that you can see on the DOM. Okay, there are stylized behaviors of markets that are extremely predictive of what's going to happen. And if you are a robot, you can take advantage of those and you can make money. Okay, we're not fast enough. So those things that we're not fast enough to catch kind of become base, right? Like, I'm not going to trade against that. I don't want to be the one trading against that. So that's the first thing that helps you out a lot is just like being in line with the market, even though you're not fast enough to make the easy money. Okay, but you can be in line with it overall, right? And then the second thing is that we can add on top of it, right? Because the real power in the DOM is you can actually see what's going on, right? What you see on a chart isn't enough. I can see that it's going up, but I need to be able to see what the market orders are doing as it's going. How many market orders did it actually take to get it there? so that I can see what the liquidity conditions are and in certain locations. And then I also have to look at the correlated instruments and the volatility, because what you can see, not that this happened today, but what you can see is sometimes treasuries moved up really strongly, hardly any market orders behind it at all. What's going on? Oh, it was from a correlated instrument. The 6J moved and the treasuries didn't trade it, right? Now you actually know what's going on, and you can actually make a real analysis of like, what is the state of the liquidity and so forth in the market, okay? Once you actually understand what's going on, you take what's going on right now and you combine that with the edges and information that you know about the news and positioning and all of these other things that predict future order flows, okay? And you take your future prediction, and now you can combine that together into a trade, right? So the DOM is an essential element, but yes, the idea that all you have to do is watch the DOM and trade off of it. I mean, I suppose it's possible, maybe there's something that I don't know about that's like a really good edge that people out there are taking advantage of. Maybe there are instruments that are just inefficient enough that you can kind of slip in there and get stuff like that. Okay. But here in the 10-year, just watch the order flow and trade the 10-year. Probably not going to work. And I only say that because that's what I tried to do for the first 2 or 3 years. And I certainly had good times and bad times, but ultimately I found that my trading was pretty random. Now that I kind of know what the flows are, I don't think that my trading is random at all. I have bad luck sometimes, but when I lose, I know what's going on. I know why I lose. I know where I screwed up. I don't have it very often, this sitting back and like, oh man, why isn't it working? It should be working, etc., etc. I'm able to look afterwards and go, yeah, okay. So I thought that this was the thing that was going to drive the orders, and it ended up being this thing, right? I just want to start with the right foot, Yeah. Well, then you came to the right place, I think. Because the whole problem is your mind is a neural network, and everything that you're passing into it is training data that your brain is using to make decisions. And that's how that's how intuition works, right? The thing is that we don't understand enough about how our own brain is wired to understand how we come to these decisions sometimes, right? You're just passing the information in, and the neural network does its thing and spits out the answer. And that's what I consider intuition. And that's just the same way that machine learning models work, is like, you pass in the training data and it forms itself based on the training data, and then it just spits out answers. And sometimes we get these neural networks that are just extremely effective, and we can't really explain how they're doing it, right? It's too complicated for us to understand, for us to like consciously think about, because it's too big. It's thousands of things. It's thousands of neurons in your brain doing stuff together, right? So if you start out and everything that you're passing into your brain is charts, chart patterns, and all of that is just random, you're just passing noise into that neural network, and that intuition is just going to be noise. And so you're wasting all of this time that you could be spending building your neural network up on an understanding of the market and what actually drives the order flows, right? You're losing that opportunity and wasting it on technical analysis. And then when you've done that for like 5 years or something, and you decide that it doesn't work and you actually want to go and trade informational inefficiencies, now you already have an existing network that you have to rewire, which is really, really hard. So it is absolutely the right thing that you want to start out understanding the informational inefficiencies. And the real problem that you're going to have, right, from a person in your perspective, right, is how do I know which thing to put all of my effort in? I don't know anything about the market, so how do I know that I should put all of my time and energy into trading informational inefficiencies like Seth says, versus trading volume profile or candlestick patterns or whatever the other thing is that you're seeing out there? How do you know? And here's the answer that I have for you. I didn't just come to this conclusion from saying, I'm so smart and I've had so much success in markets, and so this is the way to trade it. The way that I came to these conclusions was that there is a large amount of quantitative empirical data out there done at universities and so forth, where they look at real statistical, peer-reviewed properties about the markets, okay? And when you combine all of these things together and look at it from a meso level, that is basically the inevitable end conclusion, is that markets are not very informationally efficient, but they're very statistically efficient. So trying to trade a chart pattern, you're not going to have very good long-term success with that. But is the current price indicative of all current information? Not even close. So there can be all sorts of information out there that you will know about the economy and flows and so forth that the market hasn't factored in yet and that you could potentially make money off of. And that's how we came to where we came from, is an empirical approach, okay? You can go back and you can verify this information for yourself. So I'd encourage you to go and watch the videos about the inelastic market hypothesis. The video I recently did about volume profiles is another really good example. The stylized behavior of markets. And I mentioned the research that we're talking about, and you can go and read those studies for yourself, look at them. If you really want, you can even go in and try and duplicate their results and, study and verify what they're saying, right? And you'll see that what I'm saying is not just some random guy's, conclusion. It wasn't me that did this. It was people much smarter than myself that figured this stuff out, right? And that's how you can know, because it's empirical. It's not based on somebody's past performance. They just got lucky, or, this is what they were taught and nobody ever questioned it, And it's like real data that I think really comes to a real conclusive results about what is the best way for a retail trader to approach the market. Well, I do have ADHD. I talk nonstop, for sure. But that doesn't change the empirical evidence, right? So if you have a problem with the things that I'm saying, then the challenge to you would be go and find empirical evidence that contradicts what I'm saying. Go find it. Show me. If you look at the market and you look at the data like this, and of course there has to be a large enough section of data. You want it at least 5 years, okay? And show that it shows some other behavior that contradicts what I've been saying. I don't think you're going to find it. I think what you're going to find is that almost everything that you think you know about markets, you learned from somebody else and was never actually proven. That the only reason people believe it is because this guy said it and they thought that guy was being successful, and then it gets passed on. Anyways, I am late. I got to get going. I just saw P1 pop up, so that means that I got to go and jump on a call. So see you guys tomorrow. In the meantime, stay excellent.